Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Okay, we think that we need to save time for our history of OpenAI. And so I'm going to do A, B, and C in record time. And frankly, there's not that much news. I'd say on Exhibit C, which is oil price, supply, and demand, the news is the plan for Gaza. And it hasn't been widely publicized, but the plan for Gaza included the Prime Minister Netanyahu calling his counterpart in Qatar and apologizing for the missiles that tried to take out some Hamas representatives in Doha. The 20-point plan has been endorsed by 17 Arab governments. So what's riding on this for the Trump administration and for all the rest of us is to settle Gaza and put the Abraham Accords, where Arab countries recognize Israel, back on. And if you think about it, we just had the 2-year anniversary of the 1,200 Jewish people or people dying and 250 being taken as hostages. And that effort by Hamas, that whole horrible outcome, was stimulated by a concern that Saudi Arabia was getting close to recognizing Israel. If this proceeds, my goodness, Trump, who's a perpetual motion machine, if you watch him on C-SPAN, he's actually looking a little tired. I think he's literally spending 21, 22 hours a day working on this. Hopefully it will succeed. On Exhibit B, the impact on oil pricing will be lower. As of last Thursday, the current price was 62 and the 26 strip was 61. How much lower they'll trade is a little unclear, but to the extent this progresses, I think that there's enough shared objectives between Iran and Saudi Arabia. So I think what this means is that sanctions on Iran, which aren't really being pursued very aggressively by the Trump administration, will really lighten up. The good news, I guess, for upstream is gas has recovered. Gas has been trading in the Waha hub, which is Permian, for like -$6, -$7. And this has been going on for a while due to pipeline maintenance on the pipelines going down to the Gulf Coast. That maintenance should be over. That differential, which is just impossible, should become a thing of the past. But it definitely is curtailing activity in the Permian. That'll curtail oil activity. This forecast of 108 Bs a day in 26, I think that will happen, but these very low prices in Waha will definitely cause gas supply to be somewhat less than it is. As predicted, the last few Wednesdays, Exhibit A is very much on everyone's mind because of the government shutdown. The good news is all 12 expenditure bills have been passed by the House. I believe that 3 of the 12 bills are in joint committee because you have to get them through the Senate where you got to get 60 votes. So obviously the appropriation bills coming out of the Senate are going to be, have quite some significant differences between the House bills, and those will have to be settled in committee. I think it's possible that all those bills, getting them through the Senate and then getting them in conference, I think it's possible that those all may get done this year, which would be terrific because this will be regular order, as they call it, rather than continuing resolutions. Will be a terrific achievement by the House and the Senate. Now, whether it appears like the Republican position is have a continuing resolution that goes through just before Thanksgiving, take it or leave it. So I don't know quite what's going to happen, but it looks like the sensible thing to do would be to have the Democrats get some commitment, especially on those three bills through that are in joint committees, and get some kind of a commitment to proceed with that, or maybe pass those things at the same time as you pass continuing resolution. I certainly hope it gets worked out. I don't know who will win politically, but it's really a mess, and it kind of obscures the progress that's been made by having these appropriation bills get through the House and at least 50% of the way through the Senate and into joint committees. Mike, Jason, anything else?
No, I think that covers it.
Yeah, certainly is a mess.
Yeah, but underneath there's progress. The fact that the Senate Democrats have taken this stance is unfortunate. The government employees' next paycheck is October 12th. The military's paycheck is October 15th. I mean, this will be totally irresponsible if there isn't a kind of a retreat by the Senate based on these bills getting done and regular order getting established. I mean, that'll just be on the irresponsible side. But enough of that. We promised to get through quickly. I'm sure we got through that quickly, but we've done history of chips, history of software, history of biotech. Now we're going to embark on doing history of companies. And we said last week, and Mike and Jason are ready to go, the most topical company, public or private, in the world today is OpenAI. So the next 10 minutes are devoted to OpenAI, and then we'll cover healthcare and some of the other news of the week. But Jason, over to you and Mike on OpenAI.
Yeah, we said that last week before knowing the news that would come out this week.
So yeah, center of attention. And the other thing to recognize is that one of our favorite podcasts, aside from Telltales, of course, is the Acquired podcast, where they spend hundreds of hours and record, 3, 6, 9 hour episodes on histories of companies. So we're going to try to do this in a condensed format, but now we understand why they are so long. So OpenAI, the story of OpenAI is pretty wild, because just a few years ago, it was a tiny little nonprofit, and it is now the largest private company in the world, perhaps.
Yeah, I think it overtook SpaceX recently.
So founded in December 2015 by Sam Altman, Elon Musk, and a handful of the greatest AI machine learning researchers, this group was worried about big tech and really Google, because Google was completely dominating the artificial intelligence industry. They acquired DeepMind, which at the time was really the only other counter to Google's research efforts. So they structured it as a nonprofit and called it OpenAI, because they were going to open source the products in order to counterbalance Google's closed for-profit system.
Yeah, and I guess a little bit on Sam's background, since it may be important these days. He was a partner and later became the president of Y Combinator. YC's a tech, Silicon Valley tech startup accelerator that backed a lot of now large companies. And today you can still see how OpenAI embraces that Silicon Valley kind of growth at literally any cost strategy. And in the early days, they did have a number of open source products going with the OpenAI name. They created a toolkit for building and testing reinforcement learning algorithms. They created a general platform to do AI testing. And it kind of allowed the algorithms to play video games, use a browser, test how well it can mimic human-like behavior. And then at one point, there's videos of this on YouTube. It's kind of interesting to watch. They created a robot hand that could solve a Rubik's Cube. And it was a big advancement at the time. But really kind of the shift in the business happened in 2018. That's when they made the first GPT-1. So this was an adaptation of Google's, a lot of the research that they were publishing white papers on at the time. The big one was the Transformer Attention is All You Need white paper. So, and it really outlined a strategy of how to create one of these machine learning algorithms that paid attention really to larger sequences of words when it was going to build the context on generating the next best fit word, and ultimately became language models.
Right. And I think the transformer model and really the GPT-1 product from OpenAI was the beginning of a major power struggle and the beginning of all the conflict and some of the drama and the stories that we hear about the company. You'll remember Elon Musk was a co-founder. Not long after that transformer model was released, he was advocating for him to take control of the company and set it up as a for-profit and raise a whole bunch of money. And internally, the other people there didn't want Elon to be the one leading it. And that caused Elon to leave in 2018.
Yeah, and I guess from when it was founded in 2015 and through this period of time, it didn't have a CEO. It was just kind of a group of co-founders and a board that ran it.
Yeah, interestingly, with like lots of money to spend on doing this stuff. But this was an intellectual pursuit, if you will, not a business. But everybody saw dollar signs after 2017 is my view. So GPT-1 was this first thing they released, totally open source. February 2019, they announced GPT-2, and it had more capabilities. You're starting to be able to see that maybe there's a trend line here that these models get better by training them on larger corpuses of data. In March 2019, they restructured OpenAI into this capped for-profit entity that we are familiar with today, and Sam Altman became the CEO. The drivers of the restructuring, obviously, everybody saw the dollar signs, right? And it was too good of an opportunity not to pursue this new technological paradigm shift. But they also knew they needed a lot of capital in order to do it. So it was one of those things where the reality of a not-for-profit system leading the research in the space just wasn't there because the capital requirements were going to be so high. A couple of years ago, Sam Altman said he was going to put over $1 trillion to work. And at that point in time, people just sort of thought he was crazy. And today, we're talking about 16 gigawatts of data center and north of $500 billion in committed projects. So we're starting to see that actually the vision for this stuff is starting to play out. In late 2019, Microsoft invested $1 billion into OpenAI, mostly by giving them Azure credits. That let them train GPT-3 the following year, which was released in 2020, via an API. This is the first AI that could sort of sound like a human. And timeline wasn't that far off of a similar project at Google where the employee believed that the AI was sentient. So like, again, with a relatively small amount of capital going into OpenAI, they did start to catch up to Google, which is really impressive. So they initially focused on making it available to engineers through the API, and it became the engine behind GitHub Copilot, which was a really incredible tool at the time, which enabled basically kind of like autocomplete. Would you describe it, Jason, as for software developers? Coding tools have gotten way better since then, but this was pretty monumental. They spent a lot of time refining the algorithm through reinforcement learning with human feedback. This gave it a personality and required a lot of manual checking on whether it was saying things that were right, wrong, or acceptable socially, right, stylistically, et cetera. By November 22, they felt the algorithm was good enough to release a more consumer-facing product that they called ChatGPT.
So we all know how the launch of ChatGPT went. It was pretty phenomenal. It was really like the oh shit moment in the history of AI and OpenAI. It was the fastest product to 100 million users that has ever been seen. So it had 1 million users in 5 days. It had 100 million users in 2 months. And I don't think that has been eclipsed since. So,
and actually Altman has said multiple times they did not expect this product to take off the way that it did.
Yeah. Well, and they weren't prepared compute-wise for that. They started throttling a lot of users, and that's when really it became capital intensive. And how fast can we build all these data centers? That's when the strain really started to be applied on this nonprofit cap profit model. OpenAI started to act a lot more like a for-profit enterprise. I don't remember what year they started charging a subscription. Was that pretty soon after?
A year later, 23.
Yeah.
Yep.
So now they're selling a product, a consumer product. Millions of people are buying it. They're needing to raise vast sums of money to build the data centers to be able to service all of the token generation for these tools. So I guess what have we seen since then, kind of more modern times, is there began a tension with Microsoft. There's still an unresolved fight over, unless they have resolved it, but how much ownership and profit sharing is retained by Microsoft. That's still being worked out. The fight with Elon continues.
Well, in 23, Sam Altman got fired by the board of directors. So,
right.
I mean, I think this all boils back to like everybody sees dollar signs, and there's very much a fight and a struggle for power and control here that shouldn't be overlooked. Elon stands up XAI as a competitor. It's around the same time.
Yeah, it'd be hard to not see dollar signs, since it took years for other platforms, Facebook, Instagram, YouTube, to build up this subscriber base, a user base this large, and they did it in 2 months. So yeah, it's a fight about money.
Right. So where are we today? OpenAI has the most utilized AI service of this type. There's competitive offerings out there, but they certainly have the largest one. They bled a lot of their initial engineering talent who've gone on to start competitive companies or different companies in the space, but they continued to have very high performing people. They've launched a handful of additional products just this week. There's a second version of Sora, which is more of a social application. We believe one of the ways you can look at AI is it's this universally applicable product. If used in a way to create additional software, they could basically eat up all of their competitors. And the demo day that happened yesterday, they released a bunch of new features, both on the enterprise side and on the consumer side, that essentially start to consume some of these smaller companies that were doing things on the periphery. So where does all this go? There's an interview with Sam Altman, actually in today's Strategy, where he talks about how they're very clear and aware that they don't have enough compute to do what they need to do. Hence all these big deals that have been announced in the last few weeks, really. So where do these things go? Everybody asks if we're in a bubble or not. And I think that is the hardest question to ask, and OpenAI is right in the middle of this. Having the most utilized consumer product means they have the most demand, but they're also subsidizing the cost of that demand because they're delivering tokens in some cases for free and in a lot of cases for less than cost. Nonetheless, this is kind of like reminiscent to the initial internet. There was absolutely ridiculously more demand than supply was available. So,
yeah, I guess that analogy breaks down to me because, and a lot of people compare it to the fiber build out, where companies were building internet transmission lines based on demand they thought would materialize based on the trends. I mean, today the demand's there. They're trying to service all of our requests to talk to ChatGPT.
This is sort of an open-ended history because we're at an inflection point of some sort where there's just more capital being thrown at this than anything that's ever existed in the past. OpenAI is at the center of it. Pretty much everybody in big tech is also playing this game. And it's without question probably the most transformative technology that we've had, at least in my generation.
And next week's history will be on Oracle, which has gone from being a company run for cash flow to a company that is spending way in excess of its cash flow. And some people think way in excess of its ability to borrow money. And by hooking itself to OpenAI, and then Nvidia supplying all these chips has a letter of intent, not a contract yet, to invest $100 billion in OpenAI, seems kind of circular. So I can't remember anything in energy or anything in any of the other industries that any investor follows that is as controversial as what's going on. And I think having our first two companies histories, the OpenAI and then Oracle, makes all kinds of sense because they're definitely hitched together.
Yeah, totally agree. And then the deal announced this week with OpenAI and AMD is interesting. I guess the rough outline of the deal is OpenAI is taking warrants worth 10% of the company. AMD is going to provide the GPUs to power 6 gigawatts. So Mike broke down the math, but it roughly works out to OpenAI gets $100 billion of AMD equity, and they have to purchase $35 billion worth of chips. So they come out way ahead in this deal.
It validates what we've been saying for a long time, is that you'd have, even if you give away AMD chips for free, it would be more expensive to run your models there than it would be to use NVIDIA's.
They're being paid to take the chips.
Yeah.
If the world plays out how all these people would like it to, it might not be a bad deal for AMD because they're behind and they're in a position where they can't catch up. I said last week, no one talks about them. That couldn't have been timed more poorly.
Yeah. I would direct everyone's attention to page 3, which is the NVIDIA page, has AMD on it. Of course, AMD's gone up a lot this week. Look at it because of NVIDIA's commitments there and other activity, they're up a lot. But it seems to me that if there is a limit on the amount of compute, the amount of equipment out there that can handle producing the tokens, it's TSMC, because the capacity to make this is pretty limited or pretty subject to using the capability that Taiwan Semiconductor has to put all this together. And people stay away from TSMC because of the political risk. I mean, suppose China invades Taiwan, but looking for commentary from Mike and Jason, I just can't imagine for all of TSMC's history, they must be in the strongest position ever to get margins, since people need more chips to handle more token production, and there just isn't. There's just a limit to the amount of chips that TSMC can make. And Intel hasn't been able to develop the capacity to make the chips. And Samsung, which is not on this page, is just way behind. So it seems to me if there's a cinch point now, it's TSMC.
Absolutely. I think if this was an American company run by an American CEO, it'd be worth at least twice as much. It'd be one of these, same size as Google, Facebook, those companies.
Yeah, absolutely.
Yeah.
And that's not to put down the Taiwanese management. It's that they have this philosophy of treating their customers extremely fairly, and they absolutely have a huge moat and huge pricing power, and they're not exercising it.
Well, and they have the political risk.
We're going to run out of time. We try to leave some time for healthcare, but there's some Tesla news. Everyone was expecting, I guess there are all kinds of expectations on their announcement, but it was less of an announcement than many people expected, simply to make a stripped down version or a less expensive version of Model Y. Jason, what happens next to Tesla? I mean, that seems like kind of ho-hum as compared to expectations about robot taxis and humanoid robots and whatnot, but it's definitely something that's within their capability, and to try to compete with BYD and others, both in China exporting, something that strategically was the right move. We have this very high valuation. I mean, we have only about $6 billion of free cash flow, and the thing's trading for, like $1.4 trillion or something. When will we see more news from Tesla, do you think?
Oh, that's a great question. I'm not sure. It was kind of ho-hum, the announcement of the Model Y, because everyone was kind of hoping there would be an EV priced at the $30,000 range. And it sounds like that's never going to come. They're just focused on the robo-taxi business now, which makes sense. So if you commodify transportation, that has a much bigger effect and much more profitable. Another thing that did happen, I believe a week ago, was full self-driving version 14 was released. Mike and I were looking for if there's kind of videos of it in use, and there's not many of them, which when previous versions came out, everyone liked to post videos of it not working well. So maybe that's a sign that it is pretty effective.
Yeah, I saw one review that was very positive on it. We're gonna have to do another field trip to the Tesla dealership and do a test drive. I was hoping they would announce the Roadster, because there's lots of really crazy rumors about what the Roadster will do, but one in particular will be a sub 1 second 0 to 60 time, which is physically impossible in the current view of a car.
Kind of. I mean, we're getting into the weeds of like engineering wise, you got to lay the traction down with tires to the road, right? The tires are the only thing that touch the road, and you can make downforce at speed to give the tires more traction. So one of the ways you can do this at rest is you have a fan vacuum suction device like on the bottom of a car.
Yep.
So,
and there is a leaked teaser video from a vertical takeoff drone company that people are interpreting them as doing a partnership with Tesla, and that they would be supplying that fan mechanism, if you will. The other thing that would get you there on speed is there was rumors about a collaboration with SpaceX for some sort of a rocket booster for off-road use only.
Yeah. Healthcare news before we completely run out of time, Jason.
Sure. A little more on TrumpRx. Still haven't gotten over the name. There's no room for ego, anyone else's ego here. But I overstated the savings potential for Medicare. The government's share of Part D spending is closer to 140 billion, and I think that's a 2-year-old number. So their potential savings is maybe on the order of 70 billion versus 100. Some things are still assumptions that haven't been cleared up. Does Medicare cover the cost of the drugs through TrumpRx, or is it out of pocket only? I think a good assumption that can be made is that purchases through TrumpRx will count towards the $2,000 out of pocket max cost for Part D plans. So Medicare subsidizes everything above that. So it is, it's still bringing down costs for Medicare. It's just maybe you have to hit more of an out of pocket max per patient before that savings will start to be realized. Otherwise, I guess there's the announcement of 100% tariff on patented pharmaceuticals. And there's ways that you can get around that. If you're a big pharma company, you can move manufacturing to the U.S. or even just announce that you're going to bring manufacturing to the U.S. or use a U.S.-based CDMO, so contract manufacturer. Again, like patented pharmaceuticals have an extremely high profit margin. All the costs are paid up front in R&D expenses when you go through the drug discovery, drug development phase. So it's kind of, I think the industry sighed a sigh of relief that it wasn't a bigger kind of hit to them.
Right. This stalemate between Democrats in the Senate, the House, and Republicans based on extending Obamacare credits, which were put in during COVID. I must say that one thing we didn't mention on Exhibit A, and kind of an optimistic note to end on today, the budget deficit will be coming down, and healthcare is an enormous part. If you go back and look at it, Exhibit A, healthcare holding flat, maybe a slight increase in Medicare is a huge part of getting that done. And we're talking about a significant decline, maybe from the 1.9 trillion range for the fiscal year we just ended, September 30, down to 1.4 or 1.5. I don't believe any other country. That Japan has a new prime minister now, apparently wants to increase spending. The UK is having problems. They can't form a government in France. We know that China is having issues with their spending levels, especially since they push a lot of spending down to their provinces who are, tend to be not very good credit risk. So if the Trump administration can pull this off and kind of levelize spending and possibly even look for some declines, this will be very good news going forward. And I think is largely not anticipated by the capital markets. With gold at $4,000, I think what is happening is people are losing confidence in the dollar as a reserve currency and diversifying and putting gold in. But the other currency pairs, whether it be yen or your dollar or whatnot, the dollar has started to strengthen a little bit. So the capital markets, I think, will begin to appreciate what's going on. And I think I don't know that we're recession free. Clearly the stock market's a pretty elevated level, but on balance, the national accounts for the U.S. going forward look better than almost anywhere else. I mean, we probably don't compare too well with Switzerland, but other than Switzerland and possibly a few other countries, we are making significant progress here. And with that, we'll be back exactly 7 days from here, and everyone be well and take care. Thank you very much for listening. Take care.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed.